The nation will be celebrating Women's Equality Day this week, a day that will commemorate women's suffrage and equal rights. And the Impact shares YWCA, Women's Empowerment ETF, ticker WOMN, will be celebrating its 3-year anniversary on Friday. That fund is up 17% this year and 68% since inception. What's behind that fund success? It's remarkable. Let's ask Tina Herrera, chair of the YWCA Board of Directors. Tina, what exactly does your fund look for in making investments, and why do you think it's been able to produce such strong return numbers thus far?
Thank you, Leslie. This is a really excellent question. For those who do not know, the YWCA has been involved in women's empowerment issues for 160 years. We partnered with Impact Shares to create this social investment fund that allows us to really do a detailed screening of those that are included in the fund itself. So we use almost 20 different filters to evaluate companies on the environment that they're creating to empower women. Having that level of rigor, I hate to use the word guarantee, but we certainly provide some assurance that the companies that are involved, the over 200 companies that are involved in the ETF, are doing the right thing to empower women. And as we know, companies that have a focus this intently on their workforce tend to be very well run and do well in other places.
How active are you with the companies you invest in ensuring that they meet your standards and meet your thresholds for investing? Is it one of those things where if they do something that you believe isn't furthering women empowerment, then you just sell the equity, or do you have an active dialogue with management to try and effectuate some changes there?
Right. So this platform gives us that opportunity to engage companies in just the way that you're saying, Leslie. It's very important that, as we know, things do change over time, and since ETFs, in this case, they're evaluated and rescreened on an annual basis, things can happen during the year. And we do have an active filter that continues to run to look at when there are things in the news that could be indicative that things have changed at that company. It does provide an opportunity for us to engage with them and help them through situations that may not be the best for women.
And Todd, we've seen just this huge rise in ESG and gender diversity ETFs and ways that investors have been playing these tremendous amount of net inflows into these categories over the last year or so. How does this tie into that broader conversation?
More of the assets are in these broad, diversified ESG products that cover all three of the pillars: environmental, social, and governance, where the more narrowly focused products focused on women's equality or gender diversity, those tend to be less popular, but not for the right reasons, in our opinion. So WOMN, the ETF we're talking about, has actually outperformed the Russell 1000 in the past year. SHE, which is the Spider SSGA Gender Diversity Index ETF, has also outperformed. So you can not just feel good about what you're doing, but actually add value to your overall account by investing in some of these more narrowly focused ESG products.
One just follow-up question on that front, Todd, is that there is a school of thought that, these ESG products are kind of the byproduct of a bull market phenomenon. And, once things do turn, if they do turn eventually, that people will sell these off because they've risen so much in value. Do you agree with that notion?
So the more broadly diversified ESG products, we don't. So those tend to have exposures that are similar to the broader market. So ESGU, which is the largest one of these products from iShares, tends to have the same sector exposure towards technology, towards financials, even towards energy, as you'd find within the Russell 1000 or the S&P 500. So they're going to perform largely in line with the broader market, but with a higher quality tilt based on its focus on some of these governance and other environmental characteristics.